Unfortunately, in 2026, volatility continues to be the name of the game. And in today's video, I want to take a trip down memory lane and give you a little bit of a story time again here, just like I did in my last video. But this time, we're gonna go way back to 2018. The very first company that I ever bought in my investing journey was Apple. I was looking up companies on my iPhone, and I had an iPad and my Mac, which is, it's back here. Probably can't see it in the frame, but it's back there. I'm sure you've seen it in old videos. But I used the product. If my phone ever broke, I would go buy another iPhone. When my iPad broke, I went and bought another iPad. Oh, and I also had an Apple Watch at the time. So yeah, I was well into the Apple ecosystem. I understood the products and I thoroughly enjoyed them. So Apple was my first stock that I ever bought. The second stock that I ever bought in my investing journey was Meta. I was on Facebook and Instagram just about every single day, and I had been using both of these products for years. Now, I didn't have a thorough understanding of how advertising worked. I mean, I understood enough. I knew that Meta and actually, I don't even think it was called Meta back in the day. I think it was just Facebook. So Facebook and Instagram, even back then, had billions of people that were using the social media sites every single day. So, of course, it doesn't take a rocket scientist to understand if you have a whole bunch of people using this social media service, all of these eyeballs are on here, you might as well sell some advertisements to them, and that's exactly what Facebook was doing for other companies. So Meta was the second position that I ever started in my portfolio. And the third stock that I ever bought in my investing journey was Microsoft. Now, important to keep in mind that this was back in 2018, so AI was not a mainstream thing. We didn't have all of these concerns about AI, or data warehouses, or all of the complications that come with AI nowadays. Back then, all I knew was that Microsoft had something called Microsoft Office, which had, Word and Excel and Outlook. Things that in my day job that I used to have back in the day, I would use every single day. So I was like, okay, well, I understand the product. It costs money for these businesses to use these services. Easy enough to understand, right? So I took the plunge, and Microsoft was the third position that I ever started in my portfolio. And when I first started buying these three stocks, this was in the summer of 2018. But 2018 ended up being an incredibly volatile year, especially towards the tail end of the year. In fact, back in December of 2018, the VIX was even higher than it is right now. Keep in mind, here in March of 2026, the VIX has been around 25 to 26, which is, relatively high, not anything crazy, but back in December of 2018, when I had just started buying stocks and I was still a beginner, understanding and learning everything as I went, the VIX shot up to above 30 at the end of December. So can you imagine what it felt like for me to be buying my stocks in the summertime, and come, the end of the year, all of this madness is going on in the world. The stock market was incredibly volatile. And what did I do with all of the chaos going on around me? Did I freak out? Did I panic? Did I sell my positions? Absolutely not. And even though, again, I was a beginner, I barely had any knowledge compared to what I have now, but I understood enough about PE ratios to know that, okay, if I was buying a stock at price A, and now the price is even cheaper, shouldn't that mean that I should buy more? And that was exactly my logic going into it as I was building up my positions throughout 2018. And let me tell you, I am so glad that I made those decisions when I was like 25. I mean, I was relatively young, still trying to figure out how the world worked, let alone how the stock market worked. But Microsoft specifically was a company that I never worried about. I mean, I think I remember Facebook had a bunch of problems in 2018 or 2019, a lot of problems with the government, a bunch of regulation issues. And Apple was actually a position that I completely sold out of a couple of years ago, and I still use Apple products to this day, but I just felt like the money could have been used towards other positions, and again, it's a decision that I do not regret. And the point that I'm trying to get across here with Microsoft is that if I were to start over and I was looking for a stock right now in March of 2026 to start a position, one that I could hold for another 8 years and not have to worry about it, I would pick Microsoft again. And the reason for that is because I love the company so much, but also the peace of mind that that dividend gives me. I have had Microsoft now compounding for almost 8 years. I mean, you can have a look at how they have grown their dividend here over time, and it's something that I love to see as an investor. Now, I have owned Microsoft for about 8 years now, but their 5-year dividend CAGR, the compound annual growth rate, has been 10.2%, which is amazing in my opinion. Coming now to the present, Microsoft has a current dividend yield of about 0.95%, which is still relatively low, but considering that CAGR and how fast they're growing it, I expect it to grow over the next 5 to 10 years, just like it has over the last 8. Now, my personal dividend yield for Microsoft is 1.24, which is again, nothing to boast about. It's not a high dividend yield by any stretch of the imagination, but it is higher than where it is currently. And my dividend yield is 29 basis points higher than where Microsoft's current yield is right now. And now that we are here in 2026, Microsoft has had over 20 years of increasing that dividend for investors. Add to that they've always had a very low dividend payout ratio, currently at about 21%. For me personally, anything under 50% is great. So to be under 25% is a company that is really doing a great job of managing that dividend. And when you pair it with that compound annual growth rate of over 10%, we're talking about a company that, again, I do not worry about. And in this video, I want to let you know that I am personally buying Microsoft here in 2026 again, despite all of the volatility and all the madness in the world. And it gave me a sense of deja vu of when it was 2018 again, when, everything was just going insane and I was continuing to double down and buy these great companies at these great prices, in my opinion. Now, Microsoft has been a company that I have been purchasing stock of since January. Throughout the past 3 months, I have been buying Microsoft. Back on the 30th of January, I bought Microsoft and it was over $430 per share. Little did I know that Microsoft was going to continue to tank throughout the year though, because in February, on 2 separate occasions, I bought some more Microsoft. The first time was on the 17th of February, and that was below $400 per share. Then about a week later, I bought Microsoft again, and it was under $390 a share. And in the most recent week that just passed, in March, again, I am buying right around that $390 per share mark. And only time will tell if I am making the right decision. But I'm definitely going to leave a comment down below to kind of remind myself to check how exactly is Microsoft doing, let's say 6 months from now, or at the end of the year even. Because I would love to come back to this video and see, hey Victor, how did that Microsoft, building up that position go for you in 2026? And I would love to know what you're doing if you own Microsoft in your portfolio. Are you thinking about getting rid of Microsoft given all of the volatility? Or are you like me and you are looking to build your position instead? I'd love to get your opinion down in the comments below. If you made it until this point in the video, as always, be sure to give me a like. It helps out tremendously. And as always, a massive thank you to all of my subscribers, and I'll catch you in the next one. Peace.